Good day, guys. Hope you guys are good. Hope you guys are safe. And welcome to my channel. If you're new to my channel, welcome. And please stick around. Hope you enjoy this content. Find value in it. If you're a returning soldier, welcome back. If you still haven't subscribed, please do. And please like the videos if you did find value in them. It does help with the YouTube algorithm. Like I said, I think now we're on 40 subscribers, and I said that March 2021, end of March 2021, I'm aiming for at least 100 subscribers. So we're halfway through, and I hope we hit that target. So please do me a favor. All this content that you're getting for free, all I ask from you is that you like this page, like the videos, subscribe, and share with your friends. So yeah, in the previous videos, we talked about the basics of support and resistance and all you need to know about support and resistance. In the first video, I talked mainly about identifying support and resistance and quantifying support and resistance. So you will notice that there are a lot of pauses in the market, but I did not highlight all of them because not all points that have pauses in the market are worth our attention. So there's a way that you need to highlight them. There's a way that you need to draw your levels. In the second video, I talked about minor and major support and resistance levels. So basically, minor zones are zones that we would like to enter. There are zones of opportunities. There are zones where we expect the market to break. So there are zones where we don't expect the market to hold for long. Whereas major zones are zones that cause trend reversals. There are zones where you identify your significant high and your significant low. So yeah, adding to that, today we're going to be talking about trends and how for you to quantify your support and resistance accurately. This knowledge about trends is very important, and I feel like unless you understand how to identify trends, it's going to be very impossible for you to now decide on how to approach minor levels. Because in the previous video I mentioned that if you are in an uptrend, you enter at minor support. If you're in a downtrend, you enter at minor resistance. So it means that you need to know your trends. So yeah, a trend is a general direction in which price will evolve, right? And you have two types of trends. You have an uptrend, you have a downtrend. An uptrend represents positive market sentiment. It's characterized by consecutive high highs and high lows, as illustrated in this diagram. A downtrend is the opposite of an uptrend. It represents negative market sentiment, characterized by consecutive lower highs and lower lows. A ranging market looks like this, and I'll show you guys also on a chart what it looks like. But basically, it represents indecision in the market and market equilibrium. So in an uptrend, generally, buyers are more than sellers. So in an uptrend, over the long run, demand exceeds supply. Excuse me. In a downtrend, supply exceeds demand. In a ranging market, where the market is in equilibrium, supply equals demand. So yeah, that's what you need to know. Moving on. So now we're going to be talking about the components of a trend. We have an impulse and we have a correction. An impulse is a strong movement that's in line with the main trend. So if you're in a downtrend, any movement that's strong and going to the downside is called an impulse. They're very strong in nature, meaning that they consist of very large candlesticks. So the strength or the momentum of a trend is also shown in the size of the body of a candlestick relative to its wick. So if you have a large candlestick, and so large relative to the candlesticks near it, right? And it has a body that's more than 80% the size of its wick. And these candlesticks are printed consecutively. So maybe let's say 6 candlesticks or 4 that look like this, right? It could be that you're in an impulse. And then corrections are movements that are opposite to the trend. They're very weak and they're very slow. So say, for example, let me erase this. So let's say right here, there were small candlesticks or a candlestick pattern that formed or a price pattern that formed and consisted of small candlesticks relative to the size. This is how you would identify. Right now I'm in a correction, right now I'm in an impulse. So any movement that's opposite to the movement on a main trend is called a counter trend. And we use corrections to find opportunities to enter into the main trend. So for example, in the previous video, I said that if you are in an uptrend, for example, right? If you're in an uptrend, you should enter at minor support. So let's say this was minor resistance, the market broke it and now it's support. The market comes, retests once, twice, and then for the third time. You should either enter here, right? Or wait for the market to break through this minor resistance, retest it as support, and then you enter. Because an uptrend is a buying market. So in a buying market, you're only interested in buying. You do not want to act against a main trend. So the same thing will happen here. Let's say this was minor resistance, the market broke it and now it's retesting it as support. You buy, and then you see that resistance is being formed here. Either you wait for the market to break through this minor resistance, retest it as support and buy, or you're gonna buy again here, and then yeah, that's what's gonna happen. You shouldn't enter the market while you're in an impulse phase of the trend. Why? Because you would be chasing. So our opportunities, our golden opportunities are only found at impulse, at correction. So here, these are your opportunities. So same applies if you're in a downtrend. And the next point is that each and every time frame can have its own trend. So it's possible that you find a downtrend on a 30-minute chart while on the daily you're in an uptrend. Means that the downtrend on the 30-minute chart is a correction. Understand? So this normally happens like this. Say you're in a downtrend, and then you find this movement right here. So this is a trend, right? But it's not big relative, it's not large relative to the size of the movement to the downside. What normally happens is that the market does this. So these are counter trend movements. Right? And these are corrections. These are still your opportunities to enter into the main trend. So now I want to demonstrate on a live chart. So for this example, we're going to be using AUD-JPY, sorry. So you can see that this is your correction, this is your impulse, sorry, this is your correction, impulse, correction, and then your major zones are the ones that cause your trend reversal. So what happened here is that the market came to this significant low and then it reversed and then formed an impulse, and this is your correction. Now you're in an impulse approaching minor resistance, and now we're about to see if the market forms a correction or not. So what happens here is you can see that in between your minor zones, these are where normally you would find corrective patterns. So the market will take breaks here unless it breaks. So yeah, this is how it simply looks. If you go back to the videos, you'll see how we actually trade them. We sell, if you're in a downtrend, you sell at minor resistance. If you're in an uptrend, you buy at minor support. Please also remember that the market has memory. So the market will always go back to these levels to just test them. But yeah, more of this content will be available in the next video. But yeah, for now, that's all I have for you guys today. Hope it made sense. I hope I made it short enough for you guys. And if you're still new, please like the other videos and check them out. Till we meet again. Peace.